guys as well to our channel and to this video in particular, right? And you want to get a link to this video as well in case you want to rewatch it, in case you want to, you know, comment on it, things like that. You'll be able to rewatch this video if you're interested in doing so afterwards. All right, so there we go. Okay, so we're live on YouTube now. And let me share this link with you guys so that you can access it later on if you want to review some of these things. All right, there you go, shared. Great, cool. Okay, so we got a bunch of people here. Greg, do you want to take it away?
Yeah, of course. And Robert, I'm on one screen today, so if you can help me monitor the chat and quick Q&A channel, that would be awesome.
For sure. Yeah, definitely.
Okay. So Robert, thank you so much for having me do this. So today we're doing a webinar. We're going to be doing a webinar on a machine learning-based stock price forecaster with natural language processing. So here's the basic agenda. First, we're going to start off with talking about who's on the call. I'll give a quick introduction to myself and Robert. Then we're going to talk about machine learning-based forecasting. We're going to give some example trading returns, talk about some of the tools that we'll be using, go over some code, a demo, and then Robert will be wrapping up with a detailed description of the course. And as I mentioned earlier, we have the chat channel available as well as a Q&A. So although I have questions at the bottom, I just want to encourage everyone to submit questions as I go. It's probably best to answer that way. And Robert will, oh, actually, I see that. Actually, let me see if I can bring up the chat at the same time here. Okay, yeah. Actually, I think it's better for you, Robert, just to monitor it because I have limited real estate here. Okay, great. So let me, okay, sorry, it jumped a few slides. So just so that I could tailor this for the audience on the call, if you guys could type out in chat, what is your occupation? If you know how to program, just hit P, and if you don't, just type N. And then also how much investment experience that you have in years. And this would help me just kind of tailor this for the audience. So, you know, as I go, you could maybe do that, and then that way I could get a better sense about who's on and how to kind of tailor this for you guys. Okay, so let me first introduce myself. So my name is Greg Tanaka. I'm founder and CEO of a company called Pika Group. And what Pika Group does is we do algorithmic trading. So we work with a lot of day traders as well as small hedge funds to take their trading strategies, use a lot of machine learning, and then we host it on our servers in the cloud to make sure that they have good execution. And I'm by education, I went to Caltech and UC Berkeley, as well as Stanford. I started Pika Group, which is a subsidiary of Percolata. Percolata, we raised almost $14 million from Google Ventures, Andreessen Horst Menlo Ventures, and so I have quite a bit of experience in machine learning as a result. And you know, Pika has done a lot of work around applying machine learning techniques to help lots of people automate their trading strategies. And Robert, do you want to talk a little bit about LumaWealth?
Yeah, sure. So to introduce myself as well, for those of you that don't know, I'm the CEO of LumaWealth, right? Been working in finance for quite some time, worked on Wall Street for a period of time, as well as also having a lot of software experience. I've managed fairly large teams of software developers, as well as been coding for the past 20 years. So that's kind of my background. And then so LumaWealth is a company that we started maybe about 2 years ago now, right? And basically what we specialize in is using software to help people with investments, right? So the way that we do that right now is through our courses, right? Where we teach, in this case is the machine learning course, which is super interesting. And it's amazing how every day I hear people with crazier and crazier types of returns. I actually spoke to someone, by the way, Greg, you might find this interesting. I spoke to someone the other day that has an algorithm that made him 1,300% in the past year, which is pretty crazy, right?
Yeah, that's awesome.
Maybe you and we should talk about that afterwards. This is a little, yeah. But yeah, so Lumi Wealth, that's what we're all about, right? We're using software to help people get better investment returns, right? Machine learning is one way of doing that. It's really a way of using basic artificial intelligence to do that, right? But then we also have other courses. We have an algorithmic trading course as well. That's kind of like, if you're brand new to this, if you don't have too much coding experience, the algorithmic trading course is the way to go. It kind of gets you really into this. And you know, we're actually have like a guarantee that you will come out of it having made a bot, right? And we also have another course that's going to be on options trading as well. Same sort of thing, using software, using algorithms to be able to buy and sell these types of things. So that's Lumi Wealth, and we're really about. So I'm sorry, I'm looking at the chat here. So never program before, just completed algorithmic trading course. So and for no, oh, this is Tiffany. Yeah, well, welcome Tiffany. Been trading since October 2020. By the way, Greg, there's a lot of people in here. You know. We have one programmer in here that I see. People, and so far people seem to have quite a bit of investing experience: 20 years, 7 years, 5 years. So definitely a good crowd. But yeah, I was just explaining Lumi Wealth. We're all about really helping you get better investment returns, teaching you how to code, and then teaching you how to use that code to actually build bots and hopefully make you some good money as well. And a lot of our students have been making some pretty good cash. I was talking to one of our students the other day, by the way, that you made 300% in the past 8 months. So definitely in a room with some good people. All right, so that's a little bit about Lumi Wealth, and I'll let you take it away, Greg.
Okay, thank you, Robert. Yeah, so as Robert mentioned, definitely check out the YouTube channel. There's lots of great content that Lumen Wealth puts up free, so check that out. And then the other thing that's really a really great resource is the Discord channel. So this Discord channel is very, very active. So there are lots of people who talk about it, even people who haven't even taken the course. So go to the Discord channel. It's definitely a great resource. For the class, we actually have a private Discord channel where we talk about homework. We talk about how to get past things that might be blocking people. And then at the end of this webinar, we're going to be sending out a survey. So we're also looking to improve. So please take a look at the survey and help fill it out so that we can make sure that we're able to improve this going forward. Okay, so let me move forward here. Okay, so why what are we doing in terms of trading? The core of trading is forecasting. If you think about what you're essentially doing when you're trading is you're trying to predict the future. You're trying to figure out, do you buy or sell a certain security in the future, and whether you buy or sell it or hold it really depends on what you think the security is going to do. And there's many ways of doing that. So for technical traders, they may use traditional indicators like RSI or Bollinger Bands, or some sort of moving average, or there's a whole hundreds of technical indicators to try to figure out, like, is this going to go up, or is this going to go down? Is it going to stay the same? So in the example here, you see the stars group, and if you look at the RSI, so RSI is down here. So when it breaks a certain band, you can think of it that it's gonna be the start of a bull run for that stock, right? And then when it hits a certain threshold on the bottom, that it's gonna kind of flatten out a bit. And so this is something that people have been doing for the past, I don't know, 30, 40 years, right? For quite some time. And for a long time, this worked okay. But as you can see, it's a pretty noisy signal, right? I mean, depending on how you draw that line, you could think that this could be triggered at different times. Maybe it could have been triggered here, right? So it's a bit of a noisy signal. And frankly, a lot of these indicators are overused now. So it's actually hard to really get a true edge of just using pure technical indicators. But anyways, a lot of these indicators are used to kind of forecast the future price of securities. So what are the problems with traditional trading indicators? So I don't know if any of you guys have read the website called Seeking Alpha. Seeking Alpha is a really great site. It has a ton of great articles on how to trade better. And I think one of the things in there that was one of the articles in there recently that was really interesting is it talked about how algorithmic trading dominates 80% of the stock market. And what's happened is that like a bunch of hedge funds, a bunch of the big investment banks, a bunch of a bunch of players in the market now you have bots in the market, and the problem with that is that it makes it very difficult for you to get an edge. It makes it very difficult for you to be able to um, uh, basically forecast the future more accurately using these simple technical indicators than decades ago before all this augmented trading had happened. And so the other big challenge with traditional trading indicators is that they're very simple. They don't have the capacity to capture complex forecasting patterns. So if you look at them, they're like a moving average, not terribly sophisticated, but not able to really handle a lot of complex patterns. And so basically, because of the rise of algorithmic trading, it's really made it difficult to make money just using simple technical indicators day trading. And also, because the indicators aren't able to handle complex patterns, more sophisticated patterns in the market are really hard to do better than the market on now, because these indicators simply they don't have the capacity. Each of these indicators have a certain amount of capacity to hold, to recognize a pattern. And the very simple ones, like the moving average or RSI, simply don't have that capacity. So these are the problems with traditional trading indicators. So what are traditional indicators versus machine learning? Well, traditional indicators like a moving average is very simple to understand what it is, right? Just adding a bunch of numbers and dividing them. So it's very, very easy to calculate and understand. And this was really important, 30, 40, 50 years ago when computers weren't very common. Very hard to have very hard to add a bunch of numbers manually. Um, while the traditional indicators are super easy to understand, like it's fairly easy to understand RSI, very relatively easy to understand a Bollinger Band and a bunch of the other technical indicators. The really big problem with it is that they don't have the ability to factor in other information. So sure, you can look at a moving average, but how do you factor in that maybe, um, someone on Reddit is trying to pump up a stock, right? Or how do you factor in that maybe, a drug company didn't get their drug approved for FDA, right? How do you factor that kind of information in? So traditional indicators are limited because they don't have the ability to factor in this kind of external signals that would influence the price of a security. The other big problem with it is a lot of these traditional indicators are decades old, right? Maybe up to 40 decades old or 4 decades old. So they're very old. And the problem is that, frankly, they're just too popular. Everyone uses them. Pretty much every standard brokerage account, on the website has these indicators, and frankly, they're just too popular. So it's hard to have an advantage over the next trader next to you because everyone's already using all of these indicators. So and because of that, and because largely investing is a zero-sum game in the stock market is, if you're using the same indicators as everyone else, it's hard to differentiate yourself. It's hard to get that edge, so to speak. Machine learning, on the other hand, is very different. Machine learning is computationally complex. This is why it hasn't been done so recently, because it's really hard. You certainly can't do it by hand. And it's also a lot harder to implement. So this is why machine learning generally isn't done a whole lot because of those two big issues. But the real big advantage of machine learning is that it allows you to factor in lots of different information, almost unlimited amounts of different types of information. And thus, you're able to get a better forecast. What forecasting is essentially you're mining different signals, maybe the historical stock price, maybe the stock price of a competitor, maybe this consumer price index, maybe um, you know you know someone's Twitter feed, right? You're looking at all these different signals and you're mining information. And the way to think about it is each of these indicators has a certain amount of predictive power. And what we're trying to do is we're trying to extract that using machine learning. And so machines are really, really good at extracting these signals from these different indicators or these different data sources. And the great thing about machine learning right now is it's very much the cutting edge, right? So it's a way to actually get an edge in your trading that you couldn't get with traditional indicators. So again, if you guys have questions about what we're talking about, just let me know. But this is kind of like the big difference between machine learning and traditional indicators. One thing I wanted to just add about, the other motivation to do machine learning, especially doing augmented trading, is that with the rise of augmented trading in the market, like as what was said on Ticking Alpha, is that the amount of profit you can make per trade is actually a lot lower than it used to be. It used to be you could actually get a lot more. So my analogy is, you used to be able to find $100 bills on the ground, right? Now it's really, really hard to find $100 bills on the ground. You're a lot more likely to find pennies on the ground. And so what you need to do is, if you want to have a decent return, you need to be able to pick up a lot of these pennies a lot faster, algorithmically. And that's a lot of the driver for this is use machine learning with algorithmic trading, so you can pick up these pennies off the ground, so you don't have to manually pick up these pennies. Because as a lot of the the big profits are kind of taken away by the big players, it leaves a lot of these smaller profits that can only be practically gained through algorithmic trading with machine learning. So that's kind of like the other big motivation for machine learning with augmented trading. Now, I've been talking about machine learning. You guys might be thinking, what is Greg talking about in terms of machine learning? Well, so if you look at how conventional programming is done, you start with some sort of data and you write a program, let's say in Python, right? And it might be if this, then that, right? Some sort of simple, there might be some sort of program that looks at the data and then makes some sort of trade based off of that. So this is conventional programming, right? So you have the data coming as inputs and the output as results. Machine learning kind of turns this on its head. So instead of having the data as inputs the data as inputs and the program as an input, what happens is you put the results. You put in what's called training data as an input, and you put in data as an input. And what happens, and this is kind of the magic of machine learning, is instead of having to write Python code, the program actually is generated by the machine learning. So it's basically swapping the results in the program. And this simple idea allows you to do amazing things, allows you to detect much more complex patterns than you could otherwise. So, um, so if you think about what machine learning is doing, it's actually learning the way you learn, right? So no one taught you 2 plus 2 by going to your head and wiring 2 plus 2 and then saying that's 4. What you do is teachers teach you that, okay, 2 plus 2 as example is 4, or 2 plus 4 is 6, or whatever, right? And they give you a bunch of examples, and you learn from the examples. And that's actually how machine learning happens. So actually, a machine learning engineer is very much more similar to a teacher in a class than a software programmer. A software programmer is more equivalent to like a neurosurgeon wiring wires in your head, right? So this is kind of like the big revolution of machine learning. It's basically swapping how the program is generated by basically giving the machine learning, the neural network, the training data, and then it generates a program. So this is pretty revolutionary. Other reasons why you want to do this is because sometimes, like if you want to recognize, is this a picture of a cat or a picture of a dog, it's really hard to program that, right? It's very hard to say, well, is it because it has 2 ears? Is it because it's fluffy? Is it because of whatever? Because you can find cats that are not fluffy and cats that don't have 2 ears, right? But it's still a cat. And how do you do that? Well, it's really hard to specify that programmatically, but you could do that by examples. Like here's an example of a cat. Here's an example of a dog. And so the great thing about this with algorithmic trading is that you could give, here's an example of a pattern that caused the stock to go up. Here's an example of a pattern that caused the stock to go down. You don't have to program it in, because some things you can't program, right? Or like, how do you know if some tweet on Twitter is going to cause the stock to go up or down? Well, it's hard to program that, right? Is it, if someone says, you know, buy this, does that mean it's going up? No, not necessarily. So what you could do now is, instead of trying to explicitly program this, what you could do is you can um, uh, give a bunch of examples of, here are a bunch of tweets that cause a stock to go up. Here's a bunch of tweets that cause a stock to go down, right? So it's a lot easier to provide those examples of training data. And then the machine learning is able to figure this out. So machine learning is powerful because it, it allows you to do things that you couldn't explicitly program. Okay, so let me give some examples. So let me talk a little bit about my company, Pika Group. So you guys are welcome to go to my website, pika.group. And what we do is we uh, we do consulting for day traders, usually professional day traders or small hedge funds. We're kind of like the back of house of a hedge fund, where we do all the, all the Python programming, all the machine learning. We're tailored to whatever the trading strategy happens to be, and then we host on Google Cloud. And what we do on Google Cloud is we essentially make sure that everything runs well, that there's no outages, that the trades happen quickly, and then we also have a user interface to this, and I'll show you guys a demo of this. A user interface where people can track their examples, run their trading strategies, make sure that it's performing as expected. We also have safeguards, and this is really important because it's impossible to have a perfect trading strategy, a trading strategy that doesn't have bugs. So we have safeguards. So in case the strategy goes crazy, it doesn't lose your whole portfolio. One of the really key things of algorithm trading, especially machine learning, is backtesting. So what backtesting means is essentially simulating what the trading strategy is and making sure it actually works. So what you start off with is backtesting, and then you do paper trading, and then you do real trading, and it's in that sequence. And that's how you make sure it really works. And then when you start doing real trading, you only put a little money to begin with, and you increase the money as it becomes as it proves to work. And then the other thing we have is we have a whole big suite of machine learning algorithms that we use to build trading strategies for clients. So this is what Pika Group is, um, and um, and so what does this mean? First, let me talk about, like, I'm in the United States, so we have these safe harbor things, and basically just want to tell you that these are just examples, and this is no promise. So Robert and I are not promising this is what you're going to get, but these are some examples of what people have done. So machine learning based investors, I'm not sure if you guys are familiar with the Sharpe ratio. Sharpe ratio is a measure of how kind of return you get versus the risk. And so higher the Sharpe ratio, the better it is. Typically anything over 1 is a pretty good Sharpe ratio. So our average Sharpe ratio of 3.3 is astounding, is amazing, right? That's really, really good. Um, and then compound annual growth rate, or CAGR. So that's what this acronym is. 42%. This is if you look at like the average CAGR of, or compounded annual growth rate of, like, the S&P 500, right? Maybe 15%, maybe 10 to 15%, something on that order. So 42% is amazing, right? That is tremendous. And this is what's driving people to do ML-based trading. It's because it allows you to get these kind of returns. Okay, so let me, before I go into this, because it takes a while for my for this trading, this backtesting to run. So let me zip over to Pika Group. So let me see here. Okay, so so let me start off a trading strategy, and then let me make it full screen so you guys can see it. Um, okay, so we're going to submit a job, and so the market's closed right now, so we're going to do a paper trade. We support both Alpaca and Interactive Brokers, so we're going to do a paper trade. Sorry, not paper trade, a back test. We can't do paper trades because the market is closed. And then let's see. We don't need to worry about bid-ask spreads right now. We're not going to do that. We're not going to do retrainings. We're going to do it for, let's say, 3, 10, 2021. And let's start it when the market opens at 9:30 a.m. And then let's have it end after a few days. And let's have it stop at the market close. And then let's start with $10,000. So I'm basically going to initiate a trading algo. And I'll go into more details. I just want to kick it off because it takes a little while for this to run. Okay, so here we're just going to use a simple trigger. I'll get into more about what a simple trigger is later. And then we gotta figure out like what is like how much higher does the price need to be before we um, initiate the trade. So let me pick the stock. We're just gonna pick the first one, Agilent, and then we're gonna do 10 shares. And we're not gonna set a maximum position, and we're gonna liquidate as soon as we're done. And then in terms of our forecasting, we have a bunch of forecasting machine learning models. We're just going to pick random forest rolling, and I'll show this to you guys later. So I'm just going to kick this off so that this could run. Okay, so now it's kicked off. So you can see these are the parameters of the trading strategy. And um, let me go back to the presentation and explain what we're going to be doing. So in this example here, we're going to use Alpaca. So if you guys don't know, Alpaca is kind of like the Robinhood of algorithmic trading. So no brokerage fees. They used to be super generous in their use of data, but now they've become a lot less generous, but still good. We use Python. Panda. So Python is a very popular programming language. It's very easy to learn. Pandas is like the Excel of of uh, of Python, so it allows you to manipulate tables very easily. Um, we can use the TA, technical analysis library of the Python library. So this one is a great library. It has hundreds of indicators in there, so you don't have to, code up Bollinger Band yourself. It would do it for you automatically. We're also going to use scikit-learn. So scikit-learn is a very popular machine learning package. Google Colab is one of the best deals out there. So it's free compute power. So basically, it allows you to run what's called a Jupyter Notebook or interactive Python. It's totally free. They do have paid version of it, but it allows you to even use GPUs and TPUs. So also a really great deal out there. And then Google Cloud Platform. So Google Cloud is very strong in machine learning. They have a lot of algorithms online, and we're going to be using Google Natural Language Processing. So these are the different tools. So natural language processing is basically taking text and then being able to classify it or being able to understand the sentiment. So basically having a human-like understanding of text. So these are tools that we're going to be using. Okay, so just want to encourage everyone to ask questions as you guys have them. So let's go over the code. So before I show you the code, let me talk about the setup. So we're going to get things set up for Alpaca. There's a great website out there called FinViz. FinViz has a bunch of financial news stories on there, and we're going to scrape it using Beautiful Soup. And then we're going to set up the training data, and then set up the test data, and then um, and then we're going to train the model, and then generate the prediction, then analyze to see, is this like what kind of results do we get, and also how much better is it when you use NLP, natural language processing. So let me show you guys the FinViz website. So what we're going to do is we're going to I'm going to show manually what we're doing, but basically we're going to be looking at Agilent, and we're going to be scraping all of the articles. So you see all these articles on Agilent. We're going to be scraping them off of FinViz, and then running it through NLP. So let me show you the Colab notebook. Okay, sorry guys. I need to have it on a different screen. Give me a second here. But feel free to type your questions in as I load the Colab. So give me a second here. I accidentally shut it by accident.
Yeah, if you
Okay.
guys have if any of you guys have any questions, feel free to ask throughout this presentation. You don't feel like you have to wait until the end to
Yeah,
ask.
definitely not. I like it. I like it being interactive. Okay. So I got the Colab up. Just let me make sure I got the right Colab. Yep, it is. Okay. So let me share my screen again. Okay. So okay, the first thing we do is we load a bunch of dependencies like the technical analysis library. We load in the Apaca Trade API library. I like to use something called Google Secrets Manager. And this it's not never a good idea to have your keys in your code. Um, and then um, and then we load dependent data frames. These are just some helper libraries, helper JSON library. This is another dependency to use some of the functions for Apaca. And then we use NumPy, which is kind of like an accelerator. And then TA is a technical analysis. And then we're going to use random forest. So this is inside of sklearn. And then we have to authenticate everything. So we use Google Colab and then there's an authenticate user. And this basically hooks it up so that we have permission to use it with our Google account. So let me scroll down here. Okay, so what we do here is we basically actually this didn't execute. Oh yeah, it did. Okay, so it's fine. Okay, so what we're doing here is we're basically retrieving the secrets from the secret manager. So in the Google console, we put the secrets in it, and then we retrieve it, and then we load in the secret keys into the Python variables, and then we initiate the APIs with Alpaca. So that's what this cell is doing. And the great thing about Colab or interactive Python is you write a little bit of code, and then you can see it executed right below here. So it allows you to be interactive. It allows you to um, debug stuff really quickly and do a lot of development very quickly. It also allows you to learn the language very easily. So it's pretty good all around. Okay, so let me show you the next section here. So here we want to be able to use the Google natural language processing APIs. So we got to import that library and then in the dependencies. And then what we'll do here is we need to set up the credentials. So that's what the block here is doing, is setting all the credentials. I took out the keys just for the sake of this demo here, but you would have your keys actually in here. And then you set the scope of what is the NLP, what is so that we can use the Google natural language processing, and then this initiates the Google NLP. And then what we're going to do now is we're going to basically start having it um, analyze um, the content. So you can see what we do is we just do a simple function call to the APIs, and then it'll analyze it, and then return a sentiment score. So so here you see that we we're using beautiful soup. Beautiful soup is sounds like a stupid name, but basically what it's doing is it's it's scraping the content from ThinViz I showed you earlier. And then we also use a request. Request allows you to kind of click on things. So yeah, you don't have to sit there after each scrape. We're going to scrape Agilent, and then what you're going to see here is basically it going through the website and then scraping the website for the news headlines. So we're gonna scrape it, go through all the news headlines, and then we're gonna start parsing it. So we have this is a function right up here, analyze sentiment. And so we're basically analyzing sentiment as we parse the data frame. It's parsing it through. And so what you'll see here, and this is an example of the output, is you'll see that basically you see this one right here, it's mildly positive. You know, as in down, 5.8% is kind of negative. You see that, so sentiment goes from -1 to 1. 1 means it's positive, like good, it's a good thing. -1 means it's negative. So so you could see this one here is somewhat positive. This one here is somewhat neutral. So you can see it's kind of figuring this out. And then what we do now is we want to put this into our data frame. So we load it into our data frame, and then we have the date time, so we know when it happens. We have the score, and then we have another function for getting the mean score. And this bar set function is something that I had to do because if you guys ever used Alpaca API, they're a lot less generous in terms of the data, being available. So this bar set function, what it's doing now is it basically will keep on pinging Alpaca to get all the data before it gives up. Otherwise, you will have holes in your data. So it'll keep on pinging it. This while loop will keep on pinging the APIs to pull the data, and then that way it returns a complete data frame. Now let's talk about the NLP portion. So what we have to do is we have to load all the historical data. So we load the data for like 1 minute, in 1 minute increments from these two dates, like for about a month, basically. And then we set it up so that we could get all these different time features, like the time of day. We could look at it in terms of Unix time. So it's like, we don't have to worry about like things wrapping over. And then down here, what we're doing is we're essentially just running a bunch of the technical analysis indicators in here, and then we join together the data, and then you can print out the sentiment. So now you could see that this is what it looks like. We have the close price, the indicator, and then the sentiment as an example, right? So now this is all kind of set up now for training. Now we do the same thing for the test side. For the test side, what we do here is we basically the setup of the test is identical to the train, but just for a different time period. So we do the next 15 days. So instead of going from February 1st to March, right? March 1st, we go from March 1st to the 15th. But the same basic setup as the training. Okay, so what that leaves us is a data frame that looks like this. So we have the timestamp, we have what the close price is. This is what we're trying to predict. So this is what we call the Y. This is the forecast that we're trying to predict. With time of day, next time of day. So you basically time features that you can use for prediction, and then a lot of other features, right? Some of these are indicators. Some of these are just like how much volume is that stock doing. So we use those features, and then we use this. We feed this into our model to train. So the way our training works here is we are doing this on a rolling basis. So the way to think about it is we are essentially we're predicting 15 minutes in the future, and what we're doing here is we are essentially moving the window over. So if this is like the training data, we are sliding the window over so that the forecast distance is never does keep on growing. Because if you don't roll the window over, then as you forecast more and more in the future, the forecast distance increases, and as the forecast distance increases, you have less accuracy. So that's essentially what we're doing here. Is we're having this rolling window so that it keeps on moving forward, and the forecast distance never gets too much. And then So here you can see all the training happening. So it's going through and training. That's what this function here called fit is doing. It's basically fitting, training the model. And then so we look at, well, what does the output look like? So here you see a data frame, and what you see here is the predicted. So if you compare the predicted against the ground truth, like 125, and this one predicted to be 122. So not perfect, but you can see it's kind of close. Or down here 121, and this is 121. So it's pretty close, but it's not a perfect indicator. But let's look at this visually to take a look at how this looks. So you see the actual ground truth is the blue line, and then the predicted is the orange line. And what you see is that the diagonal lines here are when the market's closed. So I should probably have deleted that because it doesn't make sense. But if you look at the squiggly lines here, you see that the orange and the blue are pretty close. So this model did a pretty decent job in terms of its forecasting. The thing that is really neat about random forest, and that not all models have this, is that it actually will tell you the feature importance. So it'll tell you like what features are more important versus others. So one thing you see here that RSI actually happened to be a really important feature. That's why a lot of people use it. So it turned out to be an important feature, followed by volume, followed by the unique timestamp sequence. So so those were the most important features for the model. Okay, so now one really important thing to do is to look at what is the error, right? What kind of error did our model have? And so what we like to use here is
Hey, Greg, I'm not sure if it's just me, but your sound just cut out.
Wait. I just got disconnected. Let me try to fix this.
Yeah, there you go.
okay. Can you guys hear me now?
Yep.
Am I back? Okay, great. Sorry about that, guys. I need to get a new Bluetooth headset. It's kind of flaky sometimes. Okay. Anyways, so we can see the MSE here is 0.23, and the percent error is about 0.25. So 0.25%, not bad, right? It's pretty good prediction. Now let's do the same thing, but let's do without the NLP, and this will let you guys know how the NLP has helped or not helped. So basically, we're going to delete the NLP columns, right? So the sentiment, all right, and then redo the training. So we're going to the same basic idea that we did before, fit it, do the rolling window, and then see how this does, right? So we run this through, it does all the training, and then we calculate with something called a p-value. So the p-value is important. Let me first show you what the MSE is. Oh yeah, here's the chart. So in this case, you can see that the percent error in the MSE is slightly worse without it, but more importantly, there's something called the p-value. So the p-value is anything under like 0.05 is usually pretty good. So this is way under 0.05. So that means that the NLP actually had a pretty significant improvement to the model. So so definitely using these kind of data sources like news sources or Twitter feeds or Reddit subgroups can do a tremendous can be a tremendous indicator or a tremendous data source to improve your forecasting. So let me jump back to the slides. Okay, so I just showed you guys kind of how we set up Alpaca, how we scrape FinViz to get another data source, how we train the NLP model, and as well as the random forest model to make predictions. And then we generated the prediction and we saw the analysis results. So definitely adding in NLP helped. And let me show you guys how we use the trigger. So far I've been showing you guys how we do predictions. Let me show you now, or explain to you how we do the trading. So this is the actual code that we're running. So this is the example that I just kicked off for you guys. it's kind of like a cooking show. I just started baking it, sort of, or letting it run while I've been going through the code. But basically, what this code does is if the close price is lower than what the predicted price is going to be, then you should probably buy. That's what it's saying. And then according to a certain threshold, and the threshold that I'm using is 0.34. But however, if the predicted is going to be lower than the current sales price, then you should probably not. You should probably sell, right, by a certain amount. Otherwise, just hold it, right? That's what this code is here, right? So you can tell, even if for non-programmers, it's not that complex, right? If the price is going to be higher, buy. If the price is going to be lower, sell, right? Okay, so let me show you guys the demo now. Let me jump to that. No, it's not here. I have a lot of windows open. Okay, here it is. Okay, so this is the run that I just did. So it started on March 10th, and as you can see, it's gone up. It's made us about $36. Now this is a very short time period. It wasn't a lot of money, but in terms of Sharpe ratio, it's like 4, which is really great. I mean, that's anything over 1 is good, so 4 is amazing. And they gave a compounded annual growth rate of almost 29%. So really great compounded annual growth rate for a very simple strategy. So this is something which you guys could do. And this is why you want to use forecasting, because it allows you to get a better signal in terms of when to buy or sell. So let me jump back to the slides here. So in the course, we're going to go over a lot more details. And so we're going to talk about like what is machine learning, how to understand it, how to apply it, what it is, how to use it. We'll talk about how that's different in terms of deep learning. Deep learning is a form of machine learning. We're actually going to build a stock forecast model that you guys can use. So this is the purpose of this course, is for you guys to build your own stock forecast model that you can actually use to make money. I just went through the forecasting demo. So we used a random forest model, forecast 15 minutes in the future. Then we used a lot of the common indicators as features, as I showed you in a Colab notebook. So I just went through the trading forecast, and so now I think, Robert, you wanted to talk a little bit about the trading course. Let me know if you want to share your screen instead, or if you want me to just walk through it.
Yeah, sure. I'll just share my screen. It'll be easier that way.
Okay. Let me stop sharing then.
Okay, no problem. I think I could take over from you as well.
Okay, sure.
Yeah, just give me 1 second here. By the way, you got one question here that I just noticed as well. So the question is, how can you tell the error?
Okay, so there's a couple ways you can tell the error. One of the ways is visually. So I showed you the chart. So if the ground truth and the predicted are not on top of each other, that's an error. That's how you can tell visually, but it's not really a great way, because usually you're looking at lots of data. The other way to tell an error is by looking at what's what they call a loss function, right? Basically, it's like some sort of error, like mean squared error or mean average error. There's many different types of error measurements, but you want to have these kind of things because they could summarize like a whole long, years worth of predictions and summarize what the error is. So it's nice to have like a numeric summary of the error. So in this example here, I used MSE.
It's great. It's basically like in statistics, right?
It's like statistics, yeah, exactly.
Cool. Okay, so let me share my screen here for you guys. Okay, so let me tell you a little bit about this course that Greg is teaching, kind of when it's starting and all that kind of stuff. I think, Greg, you can probably speak to the basically the curriculum a lot better. But this is our machine learning course. As I said, we have several different courses. If you're interested, you can go up here, courses. We have algorithmic trading, machine learning as well. We're going to be adding in options trading soon. All right. We have several different plans for this course. Right. So we have the self-directed plan, which is basically the recordings of the lectures. You get to watch the previous lectures, but you don't get that interactive component. Right. You get access to some of our community, but not all of it. Right. so that's our self-directed plan. Basically, it's pre-recorded videos, right? Our most popular by far is our live courses plan. And the live courses is basically kind of what you're getting right now with Greg, except even more interactive. You can have your camera on, you can use your voice to ask questions instead of just typing things out. But let's say Greg is teaching this course and you don't understand something, you could just stop him and ask, right? Greg also spends a lot of time with people on the phone as well, directly one-on-one. So if you need some questions answered, right? And then, of course, you're part of the community and you get to know other people in the class as well, which is very, very helpful. I don't know about you guys, but I always found pretty much anywhere I went to go learn, getting to know other people in the class is very, very helpful because you guys have common interests. You guys can work on projects together. You could share code, all those sorts of things. So that's all very, very helpful, right? And then we have our project help and tutoring plan. And what this is basically, you know, you're going to go through this course. You're going to get everything that you got before. You get access to the recorded lectures. You get access to the live classes. But on top of that, we'll also sit down with you and we'll really put in a lot of time for one-on-one help. We'll also spend a lot of time. If you need some development work, we can help you out with that as well, right? You know, some of our students, you know, they're developing a bot. It's like, you know what, can you actually help me get started with this? That's a project help and tutoring plan. And we could set some things up for you that way too. Right. So it's really getting a lot of hand holding and will really help you build out whatever you need to build. Right. These are the prices for the courses. So self-directed plan, as I mentioned before, it's basically you get to watch the videos. You get a chance to still speak through our community. You can ask questions, but it's really going at your own pace and just watching the course recordings, right? The live classes, again, is our most popular plan. And this is where you get to really interact a lot with Greg, ask him questions throughout the course. Greg, I know, also spend some time doing, you know, live Q&A if you need, and basically going through the phone. And then this is the project help and tutoring plan. And this is basically, you know, you get lots and lots of hand holding on top of all that. Where, you know, we'll even help you in many cases. We'll help you actually even build out a lot of code, right? So those are 3 different plans. We also provide discounts if you get them as a bundle, right? So with our algorithmic trading course, for example, a lot of people like to take both of them together, right? The algorithmic trading course gives you kind of like that base knowledge. Even if you don't know how to code, you can take this class and really get started. And then machine learning helps you take it to the next level, right? And these are all the bundles here. You save quite a bit of money by buying the 2 together, right? Through live, self-directed, and then even project help and tutoring, which we don't have up here, but you do save quite a bit of money when you buy the 2 together, right? Okay, I can let maybe Greg explain what is machine learning and all these things. I guess we already kind of covered that in the course curriculum, but one thing I want to bring up before I give it back to Greg is that this course is starting very soon. So it's starting in 3 weeks. Our registration closes in 10 days, right? So if you want to sign up, we're cutting off the registration in about 10 days. So if you want to sign up, this is basically your last chance to do so. You'll have about a week to do it. And then the course itself starts in 3 weeks. And then this course is, it starts on the 26th of August, right? So right here, 26th of August. It goes for 8 weeks long, excluding if it falls on a holiday, right? Which I don't think there's any that fall this time around. But it goes for 8 weeks. The amount of effort that we say you should spend on this is about 8 to 12 hours per week. That includes about a 1.5, maybe 2 hour lecture every week. So you'll get that. You get 2 hours of live time with Greg every week. Plus, if you want to schedule a one-on-one, whenever you want to do that, and it's every Thursday at 8 p.m. Eastern or 5 p.m. Pacific. And then you'll also, you know, we also say you should spend an extra couple more hours per week actually doing this stuff on your own as well, right? Our early bird special already ended, but if you're interested in our next class, if August doesn't make sense for you, we are having an early bird special for that class, right? So instead of paying the $3,500, for example, you get 20% off, which is, you know, $700 you'll save, right? By buying it early before the September 14th. But that course starts on August 28th. Same thing goes for 8 weeks. We recommend 8 to 12 hours per week. It's on every Thursday at 8 p.m. Eastern or 5 p.m. Pacific. So basically the same time, same bat channel, same sort of thing, except this one. Yeah, thank you.
I saw that show.
You got that joke. the old school Batman.
Yeah.
So this one, August is the one that's starting very soon. So if you guys want to sign up, make sure you sign up as soon as possible because the class is starting soon. But if those dates don't work for you, then you can save some money if you buy right now for the October course, and that one starts on the 28th of October. All right. Cool. Okay, and then I'll pass this back to you, Greg. You could talk about course curriculum. I guess we already covered what machine learning is and all that kind of stuff. I guess course curriculum and course projects. Right.
Yep. That sounds good. Okay, let me share my screen.
Yep.
Let's see. I just gotta find. Do you want to keep sharing, or should I share my screen?
Go ahead. Go ahead and
okay.
Share yours.
Okay. Let me share my screen. Okay. Do you guys see my screen?
Yep.
Okay. Perfect. Okay. So yeah. So here's the course curriculum. We've broken it into 3 parts. The first one is really the basics of machine learning. And so the first week we start off with introductions, help with all the system setup, make sure everything is kind of ready to roll, do Q&A. The second week we get into machine learning basics, like why and what is machine learning. I start with some really basic examples like linear regression, random forest, and also training. So training is everything. You got to think of yourself almost like a teacher, right? So it's very, for those of you guys who are programmers, it's a very different way of controlling machine than programming. So I get into that, and then deep learning, right? So there's shallow learning like random forest and linear regression, and there's deep learning. So we talk about when do you want to use each, because deep learning is not good for everything. Although a lot of people like to try to use the biggest, baddest neural network for everything. That's really not the right thing. You want to use the right tool for the right problem. So we get into when that is, when you want to do it, why that is. We also get into the training and validation of deep learning models, and then optimizing models. So the great thing now these days is that there's a lot of AutoML stuff, so it makes it a lot easier to use machine learning than ever before. So you use the Google AI platform, and also we go over experiment, which is a really great hack. I don't know why more people don't know about it, but it's a really great way of being able to get better results. So this is a little hack that we have that will pay big dividends in terms of accuracy of your model. Okay, so there's 2 projects. The first project is a time series forecasting. So what we're doing here is we're going to get into what is time series versus non-time series and all the theory behind it and how to train and validate. And time series is more tricky than regular non-time series. So in the first part, we're doing mainly non-time series. And the second part, we're doing more time series. And then we build the stock forecasting model. So we do all of the feature selection, error measurement, which cannot be underemphasized. Error measurement is like really important. The whole project setup of all this. So we get a basic stock forecasting model. Now for the capstone project, and this is the really exciting part because you guys will walk out of here with a model that is, should be a lot more accurate than you can do manually. And you can use it to control your bot, is natural language processing. So this opens up so many doors, allows you to get access to so many different data sources. So we'll get into what is the importance of it, how it works, how do we use it with Google Cloud, and then we hook it up to everything, right? Get the sentiment analysis, hook up to news feeds, and so yeah, that's the basic curriculum. And from my vantage point, I think one of the things that is probably most powerful is something that Robert talked about, which is the other people in the course. I think I've seen people get together and they continue on to work together on different projects. So I think that's actually a really key part of the course. And I think I'm on a lot of Discord channels, but I think the one on LumaWealth is actually one of the most active ones. So I think that's a big community. So when you guys take the course now, you should definitely join the Discord channel. And want to just jump back to the presentation now, and let's see, and to see if there's any questions. I kind of went over things quickly. But we're trying to cover it in an hour because your time is valuable. But we're also doing this webinar as a way to kind of answer questions you guys might have about machine learning, about augmented trading. So please, put them in the chat.
So I guess there's one question here from Tiffany. So how do you rate machine learning to algo trading?
Okay. So they're not the same. They're not comparable. Machine learning is much more around, in the case we're using, it's much more around forecasting. Augmented trading, you could do augmented trading without machine learning. In fact, a lot of augmented trading is without machine learning. In fact, I would say most of it is. Machine learning is how you get that edge for your augmented trading, because a lot of augmented trading. Let me just go back one slide. So if you could do augmented trading like this, right? It could be simply this block of code here, but instead of a prediction, right? This could be RSI. This could be moving average. It could be whatever, right? So this would be if you just replaced prediction with RSI. This could be that, right? So it's what it is. It gives your algorithm a it makes it smarter, right? That's basically what it's doing. It's making it smarter than it could be otherwise. So without augmented trading, you have these very simple kind of logic, right? Because the thing about it is, like, as we know, stock market is not black and white. It's not 0 or 1, right? It's not binary. There's a lot of shades of gray, and so you need to be able to interpret. Did this tweet mean you should really buy? Does it mean you should sell? Or should I just hold it, right? And you can't get that with regular programming. It's impossible to do. And that's what machine allows you to do. It allows you to see the shades of gray. That's reality. And you need these shades of gray to actually accurately trade stock, or to actually trade it at a profit. So great question. Thank you. Other questions?
I have a question for you, Greg. I don't know.
Sure.
I don't know if you're able to share this information. I was wondering what's the highest return you've ever gotten on for any one of your clients?
Well, we don't trade ourselves. We don't do any proprietary trading because it's kind of a conflict of interest. So for us, we work with clients. They usually have some sort of trading strategy, and it's usually highly proprietary and secret. So we don't trade or share our customers' strategy with other people. But I've seen. I think before the class started, you told me about something that had like a 1,300 or something % increase, and you see some of that stuff. You see the astounding numbers, and the reason why is because it's like the analogy I was talking about earlier, where in the old days you could find $100 bills on the ground, right? You could do the stuff manually and pick up $100 bills on the ground. I'll do that, no problem, right? But when there's a penny on the ground, are you really going to do that? Are you really going to stop and pick up that penny off the ground? Well, probably not, right? But if you could do it automatically, because there are a lot of pennies on the ground, just you can't pick them up all manually. Why not, right? And that's kind of like what algorithm trading and machine learning allow you to do. It allows you to pick up these kind of pennies, right? These slight profits per trade, but do a lot of them. You can do 10 trades a minute, 10 trades an hour, right? And so while it may not be humongo dollars per trade, right, you could actually make pretty good money. So that's what this opens up, and that's why you have to get these astounding trades. Because I mean, try trading 10 trades an hour, 10 trades a minute. No humans can do that. It's like crazy hard, right? And you have to be glued at your computer, and you can't read all these things all at once. You just can't do it. So a lot of algorithm trading, a lot of machine learning, actually a lot of trading is not for, it's not like Warren Buffett type of trading where you're buying, 10 years in the future with Coca-Cola. You're essentially trading within a day, right? And so it's short-term focus because because the machine learning has an advantage versus humans. Humans have an advantage of a long, like when there's a sparsity of data, not much data, and it's over long terms. But machine learning has a big advantage when there's lots of data and the time frames is really short because humans can't process fast enough. And so, that's why a lot of algo trading actually tends to be somewhat, intraday focused versus like, 10-year horizon type things.
Cool. Awesome.
Oh, actually, somebody just asked a question. It's actually what I just asked. Is this
literally just answer that, right?
Yeah. Someone predicted my my question. So yep. But yeah, I mean it's yeah. So humans are better at long term, but computers are way better at machine learning is way better at short term because the volume of data, like trying to track 10 stocks at once, trying to read, gazillion Twitter feeds at all the same time and Reddit and doing all that and do 10 trades a minute. No human could do that. It's impossible.
Awesome. Very cool. Anyone else? Any other questions? Cool. So I guess that's it. We've left a decent amount of time for Bill to ask questions. Is there anything else that you want to cover, Greg, before?
No, I think we covered it. I think I think the kind of setup of this is quite unique in terms of it's not just a course; it's also kind of like the individual consulting, which, by the way, just to let you guys know, I charge a lot more for my consulting than which we have a partnership with Robert, so there's a special rate we're giving him. But I've seen the students do amazing things, and so what I really think is amazing about algorithmic trading and machine learning these days is it's like the early days. So you could do tremendous. You could make some really nice returns as a result. But it's not necessarily it's hard to do on your own. But with low guidance, I've seen a lot of people do some amazing things. So yeah, I think it's pretty neat. Oh, actually, we have one other question here. So how are we locating stocks that are moving to trade per day? Actually, Robert, do you understand that question?
I think I understand it, and Tiffany, you can correct me if I'm wrong. But basically, I think the ask is, yeah. So, are you using machine learning to find which stock to trade, or are you just trading within that stock, right?
Oh, I both ways. I've seen people do stock screeners where they look at, and a stock screener is a great way to run up your Google Cloud bill because we've done that. Basically, you'll look at 1,000 stocks and try to see what is the best one, or you might do pair trading. So it's not just picking one stock, but it's also you may select which stock you want to actually trade on. Because one thing about machine learning is that what's good for one security is not necessarily good for another security. It actually varies. So good question. So yeah, so we have stock screeners, and the way a stock screener works is it will backtest your strategy against a bunch of securities, and then pick the best one. But it takes a lot of machine processing power, so you got to be careful. We've gone like $5,000 bills out from Google if you're not careful. So yeah.
Wow. $5,000 is not that much if you're making a ton of money back, though, right?
No, it's not. It's not. Yeah. So it could be worth it, right? But I mean, so that's one thing is it's not programming. Usually you don't worry about the compute cost that much, but for machine learning using GPUs or TPUs, and so you have to start thinking about the compute cost. So that's one thing that's a little bit different with machine learning versus just straight algorithmic trading.
Cool. Awesome. Okay, great. So if no one else has any more questions, I think we could probably wrap up for the night.
Okay.
Thank you very much, Greg, for your time. It's always a pleasure. I feel like I've seen this webinar quite a few times, but I still learn new things each time around. This is great. Definitely enjoy hearing what you have to say, and it's always astounding how much money people are making doing this sort of stuff.
It is. I sometimes I wonder, like, should we just be helping or should we do our own proprietary trading? It's hard to do both. So for us, we chose just to be the back end of hedge funds. That's the way we kind of position ourselves. But Someday I'm thinking, oh, maybe I'll just do that one day myself. But I don't know. It's hard to do it because you have conflict of interest. So, but
Definitely. Some of the new
yeah,
Renaissance
awesome.
technologies, right?
Yeah, exactly. There you go.
Yeah. All right. Well,
Okay.
great.
Well, yeah. Thank you everyone for attending. Really appreciate it.
Thanks, guys. Hope you have a great day.
Have a great day. Bye bye.